Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, welcome back to another episode of ETF Spotlight. I'm Daniel Snyder, here from Seeking Alpha. Today, we are joining into really these funds that have just completely felt like they broke the internet. And we're talking about Congressional stock trading. We have the two funds, NANC and GOP, but we are joined here today by Dan Weiskopf. He is the portfolio manager over at Tidal Financial Group. Dan, thanks for joining us. I know, like I said, I'm super excited to dive into this. I feel like every time I'm on X, like just my entire feed is talking about Congressional stock trading. So maybe we can kick off for the start. Where did the creation and the idea of these funds come from, and how did they come to fruition?
Well, first of all, I have to give credit to Subversive for really embracing the mandate. And what is the mandate? It's really to hone in on how members of Congress are investing. And we all know they have conflicts of interest as well, right? And trying to unpack the alignment of their interests, meaning members of Congress, and how they're investing, and that of the investor, right? So why shouldn't we all benefit by how members of Congress are investing? Because that's just another way of voting, right?
Yeah, they're voting with their dollars. And we, from the outside, are all looking at them going, well, they must know something.
They must know something. Yeah.
They have different committees for different things. And so when was the light bulb when it was just like, okay, well, we can create an ETF for this that shows the two sides of the aisle?
Well, I mean, by way of background, Tidal Financial Group, we create ETFs. So we help ETF sponsors grow as well. We have about 228 ETFs across 34 billion. And Michael Arabak came to Tidal with the idea, and we were the right platform, and it became, right?
Yeah. And so we're going through these fund processes that take all of the forms that the congressional people are filing, right? They're giving us their stock trades, sometimes delayed, sometimes real time, right? We don't really know when they're going to file, but when we see those forms come through, we all kind of pay attention a little bit. So it's about the U.S. sitting Congress people. Why do you believe that there's such investor demand now to track these portfolios so closely, especially in an environment where the market does have such domination from, say, the Mag 7, for example?
Well, you just kind of answered your question a little bit, right? What does your member of Congress think about the Mag 7, or what's different, right? Or sometimes it's all about a sector. Like NANC is very weighted towards technology, and it's a growth strategy, which is really exciting for a lot of people. And, policy is changing. So I think a lot of people are excited about NANC particularly because they see technology as the future, right? But the irony is GOP is a little bit different versus NANC, which is just how you'd want them to be because they complement each other.
Yeah, so you got NANC Democratic, GOP, yep, the Republican conservative side. And as you mentioned, they both have kind of like what they want to see the economy do. And you're kind of seeing that within the portfolios, I would say, as well. But going back to what I mentioned earlier, sometimes there's a delayed report. So how do these these ETFs, how do they handle a delayed report filing for the portfolios?
Great question. So they're supposed to be filed 45 days after the purchase, right? And we just saw one that was 100 days delayed. And it's a member of Congress named Gillis, okay? And just today, right? And at the end of the day, there's a fine if they don't follow the rules. Now,
It doesn't seem like it's enough of a fine, though, or it wouldn't
what
be
makes you say that? Because it's $200 on an $850,000 investment by somebody who was an investment banker. And in my world, the financial services rule, if we don't follow the rules, we get spanked really hard. $200 is nothing. And more, even further to the point, I would say if they are late on 100 transactions, it's the same as one. People are talking about making real changes here on the policy and outlawing how, whether or not members of Congress can invest. But, we can change things easier and just make it, hey, 1-2% of the filing if it's late. Make it a principle-based solution. And, that would be reasonable to me.
It's actually a really good point. Do you think, because you mentioned the risk, right? There's a lot of risk of, like I said, it's all over my feeds when I'm online now of people that are in uproar that this should not be happening. You should not be able to trade. And they're all coming up with different strategies of, well, make them only do, S&P 500 ETF or whatever it might be for them, their family, their friends. But I think people think about them as like kind of the sense of corruption, right, of the delayed filings and everything else. So it's like, well, maybe if these corrupt people are delaying their filings on purpose, why wouldn't they just go do it a different way through back alleys and have investments? You have any thoughts on that?
Well, they shouldn't be investing in, we'll say, sectors or stocks that they know a lot about. They definitely have information that isn't commonplace, right? Or it's like wolves watching the henhouse, right? It's just not realistic that they can manage the conflicts appropriately. And ideally, they wouldn't be investing at all in specific stocks. I'm just not sure that we're going to get there. That's the thing. And will they invest in the back alleys in the gray market on blockchain in a couple of years from now where it's deregulated? It's always going to be regulated. That's the thing, right? So I just don't think it's a realistic probability that stock buying by members of Congress will be outlawed, especially when some of the members of Congress are worth so much money. They're not gonna agree to it.
Yeah, that's actually a really good point. All right, so back to these ETFs. Sorry to get sidetracked a little bit. Back to the ETFs. So how do these funds actually work? When somebody files a report, are stocks added to the ETF that day? Is it at the open of the next day? How do these actually work?
Yeah, so we're watching things daily. Okay, every day when we see the filings, we're updating, we're looking for a trend. We're doing comparative analysis through data that we're getting from unusual whales. Okay. When we see a pattern, we'll make a change, but it has to be an established pattern of buying. And we saw that as an example in UNH, right, where 6 members of Congress bought it all within like a 6-week period of time. Maybe at the bottom, we'll see, maybe not at the bottom. But the interesting part here is if it wasn't the bottom, are they in a position to help the stock out, right? And they've got that conflict of interest in here. But going back to your question, then we are reviewing it and then determining if it is a trend and then adding in 25 to 50 basis point increments. In the case of UNH, we went to 1% because it was so prolific by the buying in by the members of Congress in GOP, specifically Republicans.
So you have different weighting methodologies is what it sounds like, depending on how the trend is going through these form filings. Does that kind of sound?
Well, the weighting methodology is consistent in 25 to 50 basis point increments. So we can get to 1% based on the number of members of Congress that are investing. Usually it's in 50 basis points. If it's a 25 basis point increase, it's mostly because the stock's already moved up, right? And we're waiting for the pullback to add to it. We want to really buy with conviction. And in the case of our spot Bitcoin exposure in GOP, we got pretty aggressive based on what we were seeing from some of the members of Congress. And that's a 2.5% position as an example.
Big on crypto. Makes sense. So let's think about the options side of what they're doing as well. How do the funds handle, like Nancy Pelosi's husband would come out with a filing saying that I've got,
it's crazy,
$1 billion worth of Microsoft call options that expire in a year. How does the fund handle the leverage aspect of the derivatives there that they're reporting?
Yeah, no. So that is a perfect example of a position that a member of Congress is putting on with absolute conviction, right? And it moves the stocks when that occurs. And so we're on top of it immediately. We're looking out for when Nancy Pelosi particularly is going to be making changes to the portfolio, and then we'll follow quickly, and she's timely with her filing. So thank you, Nancy. We appreciate it. I'm sorry, Honorable Nancy Pelosi.
Yeah. All right. So on the contrary side of things, right? How does it handle the sells when they sell off their options? They sell off their stocks. Is it the same method reversed?
It's the same method. We've been tending to take away from some of the smaller positions that are 13 basis points or something like that have drifted down because they're not going to have an impact, right? So if we need to raise cash and we see some selling that might even be rebalancing on a position that is 13 basis points, we might trim back and just get rid of that as a source of cash because it's not going to make a difference. There's no real benefit to anybody who holds the fund on a 13 basis point position. So we want to have a tilt towards the larger allocation so we can make a difference.
All right, Dan, one more question before we get out of here. I'm taking quite a bit of your time here, but what type of investor do you feel like these funds are meant for the most?
I love that question because you think about who the investor is who's leading to the decision making. And guess what? It's like a 57 to 63-year-old person. Okay. So that's pretty, I wouldn't say old because that's my age, but a sophisticated buyer, I would say. And then when you look at NANC, it's more of a growth strategy. At least that's how it's tilted in the past. There are about 130 different ETFs out there that are large cap growth, right? And similarly, GOP is tilting more to value. And why wouldn't an investor look at it from that perspective? So my answer is large cap growth for NANC, value, large cap for GOP. And the weighting schemes, again, it's like 50% or 51% on technology on growth. No surprise there. And then on value, it's like 19% in technology. And there isn't a lot of overlap, coincidentally, between the two funds. And you get a little Bitcoin then. You'd have to expect that, right?
Yeah, I mean, makes total sense. It's kind of what the administration ran on, right? Talking about the cryptos. So it makes sense that it's there as well. Well, thank you so much, Dan. Really appreciate it. Everybody, go check out NANC. That's the NANC fund that we were talking about, and GOP. That is the Republican fund that we've been talking about here today. Dan, can't thank you enough for your time. Helped clarify a lot of things here for me personally. I hope the viewers watching as well really got some good insights here. And everyone, thank you for watching this episode of ETF Spotlight. We'll see you here again next week. Take care.
Thanks, Daniel. Appreciate it.